Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
You're watching Stockwatch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Ricus from PSG Hole in One Ruimsig and Jean Pierre Verster from Protea Capital Management. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or an X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gents. Starting off with you, Ricus, of course, the big news of the day was gold breaching that $4,000 dollar mark, per ounce. What do you think of that? Was this expected? And also, does it mean that there is more risk that is priced in the markets?
It's nice to see 4,000, but in the end, it's just a number. But as far as the momentum behind that increase and the ongoing momentum, I can't see any signs of that abating. There is still a concerted buying of gold by whether it be central bankers. I think institutions which have avoided it now has to, by virtue of their mandate, start taking a position in it itself. And the whole process has obviously been driven by uncertainty in the developed markets, specifically central banks, and that's on geopolitical concerns, and we don't have to go into detail of on that. It's in the news every day.
And I'm actually just wondering, because I mean, we actually saw red across the board today in the markets. JP is also just going in tandem, this increase in the gold price, with markets maybe starting to be nervous about the US government shutdown?
Maybe. Although the US government shutdown happened a few days ago and the market went up on many of those days since. So when it comes to daily movements in the market, it's like, thinking about someone's mood for tomorrow. You don't know if they're going to get up on the right side of the bed or the wrong side of the bed. So, the US market opened positively at 4 o'clock our time. It opened in the green. Now it's in the red. So you can actually, they've got these 0-day options these days in the US and RT, which means that you can bet throughout the day by buying an option on the index, individual shares, and it expires at the end of the day. Not in 3 months like normally is the case with quarterly options, at the end of the day. So we've reached the point where you can speculate on where markets will close every day or where shares will close every day. So if you're very good with that, you can make a lot of money. Unfortunately, history has shown that the normal outcome for this, whether markets or a specific share will close up or down, is roughly or exactly 50-50. So it's a very difficult one to have the probabilities on your side.
All right. Well, gents, let us get into some of the questions that have come through. And a pretty one that has been in focus for, I guess, the last 2 days is Mondi. So I've been tracking Mondi, Mr. Price, and Capitec. What are your thoughts on entry levels for these stocks? Let's actually start off with Mondi, because Ricus, it was down 17%, 18% yesterday, and I think today it's extended those losses about 3%. And I mean, I was wondering if maybe this could be an entry point if you are, trying to play the game of getting in now before things get better. But then I don't know if that's a wise choice, considering the fact that you don't know the timeline of that turnaround. What is your take on Mondi?
Yeah, cyclical things like these are always a problem. You never know how high they're going to go or how low they are going to go. Obviously, the market wasn't impressed with results, or was it a trade warning?
Trading update.
Trading update. Yeah, I started getting worried about Mondi when it started going below about 230 Rand. And at that stage, I had about a 180 Rand level pegged. It's pretty close to that. Whether that's going to be the bottom or not, I don't know. But let's see what happens just from a technical perspective when it gets there.
Yeah, just looking at that chart, that was a really, really sharp move downwards yesterday. Your take on Mondi, JP, and particularly the fact that it wasn't just Mondi that was actually hit, it was the whole paper and packaging sector.
Yes, a very disappointing update from theirs. I mean, things are tough in the paper and packaging sector at the moment. Mondi is from a South African perspective, taking the biggest brunt of what's happening. But if you zoom out, SAPI has been under pressure. And if you look internationally, a lot of these paper and packaging businesses are under a lot of pressure. So the three opportunities you mentioned, I would say one is a value opportunity. If you look like Mondi, look at Mondi. So its price relative to its balance sheet, to its assets, or to its normal level of earning, looks cheap. Capitec, I would say, is a momentum opportunity because the share price has been going up. So if that trend extends, that's a momentum opportunity. And Mr. Price is a GARP opportunity, I would call it. Growth at a reasonable price. And between the three, I like my GARP opportunities. I like high quality companies that grow their earnings generally at a rate above inflation over the long term when they look reasonable, because they rarely look cheap. And at the moment, Mr. Price shares, I would say, look reasonable. So of the three you've mentioned, my preference would be for Mr. Price shares.
Okay. Quite interesting. Yeah. So JP likes Mr. Price. He'd be going for Mr. Price at this point, as the big opportunity that he's seeing. What would you be doing with Mr. Price at this point? And it's quite interesting that JP mentioned that previously it has looked expensive. Is it good enough for you to go in when there is a significant dip there, Ricus?
My preference in that sector has been Pepcore, but that being said, over the past 2 months, Mr. Price has started outperforming Pepcore. So I agree with JP's view that you're picking up a decent company at a decent price. If you have a glimmer of hope for the SA consumer going forward, whether it be because of lower interest rates or a little bit of better growth, then Mr. Price is very well priced and also positioned in its market to gain from that. So yeah, either or, but I don't think you can go too far wrong by starting to initiate a position in Mr. Price.
Well, JP, you mentioned Capitec being the momentum opportunity. How would you be approaching that at this point? Is it that because I think for a normal person, you're constantly wondering if this strong momentum can continue?
So firstly, I think one should mention that when I use the term momentum, there are two types of momentum at play here when one speaks about Capitec. The one is the share price momentum. It has gone up strongly. The other one is the operating momentum. The operations, the financial performance has been growing very strongly. So they've got momentum in both. So generally what you don't want to buy momentum share when the operating momentum slows down. That is also sometimes called a growth trap. And you can really lose a lot of money when you buy something that still shows share price momentum, but the operating momentum slows down. In the case of Capitec, the operating momentum is not slowing down. It's actually still accelerating because they've got so many growth vectors, whether it is some of the new operations in South Africa or then some of their fledgling operations that they're starting to grow internationally. It does mean that as long as they can maintain that and they can maintain the operating momentum, the share price momentum should follow. So I'll keep a close eye on the interaction between the share price momentum and the operating profit momentum.
Yeah, and actually that's the thing, you're right. Investors had been worried that if the share price momentum can go hand in hand with operational momentum, and they have proven some investors that have questioned that momentum wrong. More juice in the stock operationally and also share price wise, Ricus?
Yeah, I agree with JP as far as the operational aspect is concerned. A lot of interesting things happening, not merely on the money they make from interest rates, which compared to other banks are doing very well. But specifically on the services side of things, whether it be through SALC or policies, there's a lot of opportunity there. And the price has been going sideways for about 2 or 3 months now, I think. And it can go higher, and I've got a target of about 4 on that. So I won't say it's a screaming buy, but I'm certainly not selling at the moment.
All right. Well, gents, let's get into more questions. There is a question here on Supergroup. What is the panel's view on a Supergroup? Should one be worried about the many share selling by the company directors of Supergroup? Well, here's one that I haven't looked at, the selling of shares in Supergroup. But JP?
So directly after they paid the big special dividend after they sold SG Fleet, there was actually significant directors buying, and the share price rose very sharply in the couple of weeks just after that special dividend. And then it sort of lost steam, and it's reversed course and given back about half that bounce since the special dividend was paid. The latest share dealing, as far as I know, has to do with the vesting of the share scheme. So it's not really directors choosing to sell, it's that the shares vest and then there's tax payable and then they have to sell to pay the tax. Otherwise, you don't have the cash to pay the tax. So I'm not too worried about the directors selling. I think the directors buying that happened just after the special dividend was paid is an indication that there is a lot of value in Supergroup. It's trading at a very low PE. We need to wait for the next clean set of results to get a sense of the normal earnings power. But in my mind, there's value in the Supergroup share price at this level.
Okay. Also, while we're waiting for those clean results, because I mean, there were questions after they sold SG Fleet if they did not get rid of their crown jewel. What do you think of the momentum of Supergroup outside of SG Fleet, Ricus?
I think vehicle sales in South Africa in general has surprised, or I won't say to the upside, but has been better than expected. And on the logistics side of things, if they can keep that together and get it better, then considering, as Joby said, what the valuation is, there is value. But I think, but I would also like to see just what the group looks like now, what they are focusing on, next set of results. And it's not the only company in that sector. So I think while that uncertainty is there, it's better to wait a little bit and also wait for the mood to improve.
All right, let's move on to our next questions. Is Dis-Chem a buy at current levels? This is an interesting one. I think we always talk about clicks, but I haven't spoken about Dis-Chem in a while. Ricus, starting off with you.
I still prefer clicks. I think just from a operational level, from the size of the company, from the way the company is run, whether it's a buy at these prices, possibly. I mean, they've always been at a high valuation, but sort of referring back to Mr. Price. I think you're getting a very good company at a far better price now than, for example, a year or 2 years ago.
All right. Yeah, quite interesting because, yeah, at JP, we always do compare clicks and Dis-Chem, but does Dis-Chem deserve a spot of its own in your portfolio?
I think at the moment, at the current share price, Dis-Chem is quite full. They've done a lot of M&A. They've been very busy, and they are trying to launch a health services part of the business. And they've got that strange structure with an offshore holding company where some directors also have a stake, which I don't quite like, as part of that whole health insurance business they're looking to launch. So I do think Clicks is the cleaner one between the two. And I would rather wait and see if Dis-Chem can bed down these acquisitions that they've made, and if they can really get this health insurance, not medical insurance, health insurance. There's a difference. It's a short-term product, and they can really get that going. If they can get that going, because there are still millions of people for whom medical insurance is too expensive because of prescribed minimum benefits. It means even your cheapest medical aid premium is high. If they can crack that market, there's a lot of opportunity. But I haven't seen any signs yet that they are cracking that market. So I'll stay on the sidelines until I see that.
All right. Well, let's take a look at BAT, and this is one that has impressed a lot of people lately, a company that seems to have gone from being a value company to a growth company. BAT at this point, would there be any interest from you, Ricus? I think you have actually mentioned that you're not quite sure about the growth profile of the company.
Well, it's completely wrong on British American Tobacco. They've performed very well over the past year. PSG thinks there's still value in the company. Obviously, the drivers are the, shall we say, the non-cigarette side of the business, and they are gaining market share. And when compared to their competitors like Philip Morris, one can make the argument that that they still have to do some catch up on that. So having been wrong, I'm sort of undecided at the moment.
All
Probably
right.
very subjective.
Okay. Interesting point that Ricus makes there, that in terms of Philip Morris, which a lot of people do prefer, they have a lot of catching up to do. With that, could that maybe be an opportunity for you to see more gains on a BAT, JP, especially as we've seen it pulling back from the highs that we had seen?
Perhaps, but my preferred tobacco stocks are Philip Morris and Altria, and it has been for the last year or so, after that very good performance of British American Tobacco. So even though British American Tobacco has come back a bit, I still see better value in those two big tobacco companies. So yes, I don't think you would have sleepless nights buying British American Tobacco at this price. But these days, it's a global market. It's not difficult to open an account and buy shares offshore. So if you widen your world and your opportunity set, I think there are better tobacco companies currently at more attractive prices than British American Tobacco.
Global market. And of course, we have seen the markets all over the show performing pretty well. What would you be doing with Coronation at this point, Ricus?
I'll be holding it. After a long period of underperformance, it's gone up about 50%, I think, over the past year, plus about a 7% dividend. So you would have done well. I think part of that is because of the way their funds were structured, which was heavily weighted towards resources, and we've seen how that sector has been performing. So at the moment, we were talking about price momentum. Price momentum is still to the upside. But as a fund manager, because it doesn't have a distribution channel, I'm not very fond of the company itself. But I'm not going to argue against price momentum at the moment.
Yeah, quite interesting that you talk about Coronation's exposure to resources, because I think if I remember correctly, they said they were pulling out of PGMs and then they said they were back. But JP, Coronation at this point?
Well, an asset management business is not a very complicated business. You make your fees off the asset base, and that's a mix of basic and performance fees. So the more assets you have, the higher your basic fees, and the better you perform, the higher your performance fees. And then you appoint a few people who hopefully add some value and make good calls, and that's it. When you deduct their salaries, you more or less get the net profit. So in the case of Coronation, their funds have done quite well in the last year or so. I think specifically the equity fund is one of the top funds over the last 12 months. And that means that they would have attracted some flows, or at least stemmed some outflows. It's been a number of years that the AUM has gone sideways. Part of that is also because the whole investment industry in South Africa has been static, because we haven't had more employment and more people contributing to pension funds, for instance. But they are a big player in the local market, and going sideways in AUM, some good performance means hopefully they can turn that into inflows and growth in AUM from performance. And if they can do that and grow the global business, which they had a bit of a wobble a few years ago, then I think there's value. But the real value was there regarding the time of the win against SARS in the court case. when they paid that special dividend. And what's that? Just over a year ago now. So it is trading much closer to fair value than what it was then. So I wouldn't mind Coronation in my portfolio, but relative to that time, I don't think it's as attractive as what it was.
No, all right. We'll talk about managing funds. Let's get into Signia. What do you make of this one, Ricus?
Not something I follow all that closely, so
Yeah.
I'm going to abstain from that.
Yeah, there are some people who don't follow. Your take on Signia, JP?
So again, it's an asset management business. They also have a big platform where the fees on those assets are not quite as high as the funds that they manage, and the funds are a good mix between passive funds with low fees and active funds with high fees, and even some passive funds with high fees. If you want certain themed funds, or you want to invest via a life wrapper into some exciting UK opportunities, whether it's health or sciences. Some of that value, unfortunately, goes to the CEO and her partner on the offshore side, because they did a deal where Bravos is now majority owned by them. But still, I like the business. I think it's got a good brand. I think that they are clever in their mix between the low and the high cost funds and how they are perceived to be a manager to back and to invest with. So we do own some Signia in our funds, and the share price has done very well. So it's not as attractive again as what it was 12 months ago. That sentence can go for a lot of shares, but we still own it and we still like it reasonably well at the current price.
All right. Well, just before we get into your stock picks, a very interesting question here. Which high dividend share is a buy? Ricus?
I don't do high dividend shares. I do high dividend growth shares. Consistent growth over a very long time. So unless I am focused on my retirement, and I know that I don't have decades to live, I would rather take a look at quality companies with consistent dividend growth over more than 5 years. And there you can start looking at possibly things with a low dividend yield right now, because that's the nature of things. Companies who grow their dividends tend to become huge dividend payers in the end.
Okay, interesting. How would you approach this question, JP?
Well, there are a few companies you can look up dividend yields these days. There's all kinds of tools. You have even some free tools on the internet, and you can rank companies by the expected dividend yield. So I like companies like Lewis, Combined Motor Holdings, Italtile. The banks like Absa and Nedbank are trading at very high dividend yields. So there's definitely quite a few. Sometimes high dividend yields don't come with growth. As Ricus correctly says, you want a combination of high dividend yields plus growth. But I think some of those names I mentioned can potentially give you both. So there are a few for you to look at.
All right. Well, where are you looking for value your stock picks for today, Ricus?
About 2 months ago, I had Datatech, and they came out with a trading update, and I know there's a restatement of numbers, but even if you look through that, all their divisions did well. Their plan in getting more annuity rather than just product sales, that seems to be coming through okay. They're in the right sector of the market as far as tech is concerned. There's not going to be a reduction in the demand for things like cybersecurity or services, and they're trading in a forward price earnings of probably about 10, which is, I think, considering their global spread, undervalued if you compare it with companies in the same business.
All right. JP, where are you seeking opportunity today?
So we know a lot of local shares are cheap, so cheap that the company is being taken over. So my stock pick is a company that has announced a deal that they will potentially be taken over, and that's Metrofile. So Metrofile does document management, and there's a lot of paper around, even though we've digitized a lot of what we do, and legal agreements and all kinds of government things that must still be kept in a paper-based type box. in a big warehouse. And the company also has got the digitization service where they can digitize paper. It's trading currently at 3 Rand a share. The offer has been indicated to be 3.25 Rand. So that's almost 8.5%. And the long stop date is in April next year, which is in roughly 6 months' time. So that means you can just times the return by 2 to annualize it. So you're talking about a return of almost 17% on an annualized basis. If you buy Metrofiles at the current price and if everything goes according to plan and the deal does happen at 3.25 Rand. So I think I wouldn't call it guaranteed, but a very high probability of a 17% annualized return for the next half a year is quite attractive in a market that in general is expensive, except for SA Inks. And I own enough SA Ink type shares in my portfolio, so it's nice to mitigate my risk and diversify by buying some Metrofile as well.
All right. Well, thank you so much for your time and for your analysis today, gents. Really appreciate your time. That is all for tonight's Stock Watch. Thanks to our guests, Ricus from PSG Hole and One Ruimsig and Jean Pierre Verster from Protea Capital Management. Up next, the close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.